Welcome to the Deep Dive. We're your source for, well, breaking down complex topics into insights you can actually use. Today, we're plunging into something really fascinating, how let's say, unique perspective from Macau is kind of reshaping how we look at Las Vegas real estate. You've probably seen the headlines, right? Property prices, maybe market correction in Vegas. Sounds like a warning signal, doesn't it? But here's the question our sources are tackling today. Is it really a crisis? Or maybe, if you look at it through a specific strategic lens, is it actually a huge opportunity?
That's exactly it. It's a really interesting dynamic we're exploring. What one market sees as a downturn, another, maybe one with a different kind of experience or a longer view, might say, well, the perfect time to get in. Our source material today really digs into this specific viewpoint. It shows how these apparent weaknesses in the market can actually be flipped into strengths. So our mission here in this deep dive is to pull out those key insights. We're looking specifically through the eyes of what the source calls a savvy Macau investor. Okay. And that's not just about geography, right? It represents a certain strategic mindset. Macau, it's a global hub for gaming, entertainment, high-stakes real estate. They understand cyclical markets. They get tourism, the long-term value of iconic places, their own experience navigating that kind of dynamic but ultimately resilient market gives them a really distinct way of seeing Vegas's current downturn. They see strategy. So, yeah, we're looking at how to spot that hidden potential.
Okay, let's unpack this right away because this is where it gets interesting, the shift of perspective. Our source is pretty clear. For this savvy Macau investor, those headlines about a Vegas property crisis, the market correction, they're not red flags, not at all. Actually, they're called a siren call of opportunity. Wow, that's quite a turnaround from crisis to opportunity. But practically speaking, how does an investor actually do that? How do they internalize that view beyond just, reading the news? Is it just having deep pockets, or is there a specific way they're analyzing this that maybe others are missing? What's the source say about their decision process?
Yeah, it's definitely not just about the capital. Well, that helps, obviously. It's really about perspective and pattern recognition. The report we're looking at highlights this as the investor frames the current situation not as like a collapse, but as a moment of transition. So others might feel fear, maybe hesitate. This investor sees, and I quote, the perfect conditions for a strategic entry. The core reasoning, which the source lays out pretty carefully, is that Las Vegas fundamentally is still this iconic, resilient global destination. It's Las Vegas. It's not going anywhere. Its brand power is just immense. So the current downturn in this view has simply created a buyer's market, which basically means quality assets are now, well, they're undervaluing assets with immense long-term potential. It's like a temporary dip in value for something that's fundamentally solid. Think of a blue chip stock maybe having a bad week, right? The real insight is recognizing that underlying, enduring value, even when the short-term noise sounds negative.
That makes a lot of sense. Yeah, like seeing a strong company's stock on sale when everyone else is panicking. If you believe in the long term, you buy. But okay, for a smart investor, just knowing it's a buyer's market probably isn't enough, right? They need to understand why Vegas specifically is still fundamentally strong despite the headlines. So what are these core strengths the source points to? What makes it so resilient? And importantly, does the source acknowledge any, actual challenges in this moment of transition?
That's a great point. It's not just blind optimism. The source presents a calculated view based on pretty solid fundamentals. It details several key pillars holding Vegas up. First, tourism isn't just coming back. It's described as a strong, diversified, and consistently growing visitor base. We're talking huge conventions, right? CES fills the city for weeks, bringing in those high-value business travelers. Then you've got massive sporting events, Formula One, the Super Bowl recently. These things draw millions, put Vegas on the global stage. And then there's the constant stuff, the residencies, the shows, the food scene, that keeps leisure travelers coming back again and again. This mix means the city isn't just relying on one thing, which makes its economy pretty robust even when things shift. The city's allure, as the source puts it, is permanent. It's this global fantasy land, right? An entertainment capital that keeps reinventing itself. So the current market correction, it's not seen as a sign the city itself is weak. It's more like a needed recalibration. The report obviously points out that this downturn has simply weeded out the over-leveraged.
Okay. So the people who borrowed too much.
Exactly. Investors or developers who took on way too much debt, betting on growth that just couldn't last at that pace. When the market cools, they can't keep up with payments and often have to sell cheap. This kind of clears the decks, you could say. It removes weaker players and creates a landscape that's ripe for well-capitalized, discerning investors to acquire quality assets at a significant discount.
So it's an opportunity created by others' difficulties.
Pretty much. It's framed as this unique window to build a foundation of American real estate holdings before the market bounces back, which it likely will, given those underlying strengths. So yes, it acknowledges a transition, but sees it as a cleansing, really, not a collapse.
Okay, this next part is where it gets really practical, I think. How do you actually do it? Especially for someone considering this kind of move. The source doesn't just say why Vegas is interesting, it lays out how. It talks about two main ways for these Macau investors to actually jump on this opportunity. What are those?
Right? Execution is key. And the source offers two pretty clear, distinct paths. They suit different types of investors. The first is direct joint ventures.
Okay.
In this setup, the investor basically becomes a capital partner in specific high-potential acquisitions. The source gives examples like distressed multifamily apartments,
Yes.
steady rental income potential there, or commercial spaces near the Las Vegas Strip, which could benefit from foot traffic and value growth. But the really clever part, especially for an investor coming from Macau, is the role of a trusted local partner on the ground.
The front man.
Exactly, the front man in the city. This local partner does all the heavy lifting. They handle all operations, management, and legal complexities. Finding the deals, negotiating, overseeing any work needed, managing the property day to day. The Macau investor provides the capital strength, and then they share in this substantial cash flow and appreciation. But crucially, they do it without the headache of navigating all the local rules and operational stuff themselves.
That makes sense. Leverage local expertise.
It's a strategic partnership. Capital meets local know-how.
So it's a way to get that essential market knowledge and boots on the ground efficiency without having to build it all yourself from scratch. Smart way to use resources. Okay, what's the second way, the other avenue the source talks about?
The second option is more for investors looking for diversification and liquidity, and that's through real estate investment trusts, or REITs.
Ah, REITs. Familiar territory for some investors.
Right. For anyone who doesn't know, basically a REIT is a company that owns or finances real estate that produces income. When you invest in a REIT, you're buying shares in that company, which holds a whole portfolio of properties, maybe hotels, shops, offices, warehouses in the Vegas area. The investments get pooled together, allowing them to buy a diverse range of assets. This approach naturally mitigates risk because your money isn't tied up in just one or two specific properties. It's spread out.
Less concentration risk.
Exactly. And importantly, REITs offer liquidity. REIT shares usually trade on public stock exchanges, so they're much easier to buy and sell than an actual building.
Easier to get your money out if you need to.
Right. So it's a more hands-off way to get broad exposure to the Vegas market as a whole.
Okay, you mentioned the trusted local partner or front man for the joint ventures. The source really seems to hammer home the importance of trust, especially in a foreign market. It talks about needing someone exceptional. What does it say about finding that right person or company? Because that sounds like it could make or break the whole thing.
Oh, absolutely fundamental. The source is really clear. This front man in Las Vegas isn't just about having an address there. It's about deep expertise, multiple facets of it, and crucially, an unwavering commitment to the investor. This partner needs to understand, and this is a direct quote, both the numbers on a spreadsheet and the nuances of the local landscape.
So street smarts and book smarts.
Kind of, yeah. They need to be great with financial analysis, valuing property, forecasting trends, but also know the local zoning laws, what the community feels, what new developments are coming, even subtle shifts in tourism patterns that could affect value. It's not just about closing one deal. It's about managing the asset for growth over the long term. And the source emphasizes a commitment to complete transparency. That's huge for building trust across borders. This means transparency from the initial acquisition price to every line item on the expense report. No hidden fees, no surprises.
That would be essential.
Totally. They promise clear reports and constant communication, probably using secure online platforms for real-time updates on how things are going. The whole point is to give the investor a secure foothold in the United States business ventures without the operational headaches. The partner is their reliable eyes and ears on the ground, handling the complexities.
Okay, and getting down to the nitty-gritty, the investment itself, what does the source actually offer? What about the terms, the potential returns? Because, at the end of the day, investors need to see a clear path to profit, right? How does it balance the risk versus the reward for this savvy Macau investor?
Yeah, that's obviously critical. A key thing the source highlights is making it accessible and focusing on consistent, tangible returns. That's attractive for diversification and long-term wealth building. It talks about reasonable entry investment costs. These seem designed to allow for strategic diversified participation.
So, not necessarily needing tens of millions for one deal.
Apparently not always. The idea seems to be structuring it so you can spread your capital across different opportunities, maybe a few JVs, maybe some REITs, which spreads risk and gives you exposure to different parts of the market. And really, critically, there's a strong emphasis on cash flow, predictable cash flow. The investment models are specifically designed to generate and distribute returns quickly and often. Think quarterly, maybe even monthly distributions.
Things like rent.
Exactly. Rental income from apartments, maybe operating profits from commercial spaces. This means you, the investor, actually see tangible returns coming back on a regular schedule. You're not just waiting years for the property value to hopefully go up. It offers both stability and income along the way.
So let's bring this all back together. That initial comparison the source made between Macau and Las Vegas, it's pretty striking. How does that connection kind of tie everything together? From seeing a crisis to spotting a strategic opportunity.
It really does. It encapsulates the whole argument perfectly. The source says, quite powerfully, Macau and Las Vegas are two sides of the same coin cities built on bold vision and calculated strategy.
Interesting phrasing.
It is. It's not just a throwaway line. It's central to the philosophy here. Both cities are these huge economic machines driven by gaming, tourism, massive ambition. Both have seen booms, then corrections, then they bounce back stronger. Investors from Macau, they know these cycles inside and out. They've lived through them. They've seen how temporary market dips can be opportunities for those with the foresight, the strategy, and yes, the capital. So this comparison just reinforces the main point. What's happening in Vegas right now is fundamentally not a crisis. It's a calculated play waiting for the right players. It's really a testament to the idea that if you have the right vision, if you understand market cycles, and if you find those strategic local partners, what looks like a challenge can actually be a huge opportunity. It's about seeing the whole chessboard, not just the move right in front of you.
That really is a powerful idea to end on. How perceived challenges can actually be these strategic moments if you just have a different perspective and the right approach. This whole Macau investor way of looking at it really reframes the Vegas situation. It's not a problem to run from, but maybe a complex puzzle to solve, a calculated move to make. It definitely makes you think twice about those headlines.
And that's precisely the takeaway we hoped you'd get. Beyond just real estate, it kind of poses a broader question for you, our listener, doesn't it? Where else in your own life, maybe your career, your own ventures, where might you see situations framed as crises or downturns? But maybe, with some critical thinking, a strategic mindset. Could they actually be calculated plays? Could they be significant opportunities just waiting for the right perspective? Think about how this framework, finding the underlying strengths using market transitions, partnering smartly, could apply elsewhere. And interestingly, for anyone listening who thinks, maybe this specific Vegas opportunity is for me, the source material actually gets very practical. It includes specific contact details for getting a private briefing, even access to a confidential investment memo. There's an email, 50milmore@gmail.com. That's 50milmore@gmail.com. And a text number, 725-305-9560. Which just goes to show sometimes these deep dives can lead to very real actionable steps right at your fingertips.
Welcome to the Deep Dive. We're your source for, well...